Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today is Monday. It's July 17th. It's about 8:09 in the morning. The market's going to gear up to open up in about an hour and 21 minutes. We still got plenty of time, and I'm hoping to get this video to you nice and early via Telegram. Speaking of Telegram, make sure, if you want to get these videos nice and early, subscribe to our YouTube channel. That's the YouTube Wealth Press channel. Subscribe to our Telegram channel. Just go to rogerscott.com/Telegram and post comments below these videos on that channel. I will respond. Most importantly, and this is most importantly, make sure that you guys subscribe to our emails and our website, and don't forget all the hot material. If you don't know where to subscribe to our material or to our VIP room, which is open live today at noon for free, no cost, you could find the link in the Wealth Press YouTube channel or our page. Now let's get into all of this stuff. But I can't wait to see you in my VIP room today, where I'll answer all the questions that occurred between the video and the time the market opened. And it's free for the summer. Now let's get into all of this stuff. What am I wasting time talking about? Talking. All right, Nasdaq 100, it's down about 4 points. Dow's down about 87. This is very, very random, but it ain't a great way to start the week. Now, I'll just show you, and this document will be sent out to you if you subscribe to our Telegram channel. It'll probably be emailed to you as well, but I know you'll get it nice and fast on the Telegram channel. This is all the earnings that are coming this week. So you could see today there's not much there, but tomorrow, oh boy, you got Bank of America, Bank of Mellon, Charles Schwab, Interactive Brokers, Lockheed Martin, Morgan Stanley. It's really coming down tomorrow. And on Wednesday, oh boy, you've got Netflix, and you got Tesla. And obviously, we'll talk more about this as the week progresses. But I want you to have this sheet because it gives you all the expectations and all the stocks that are coming out later this week. So you could see here, this is the agenda for Wednesday. Here's all the stocks: Goldman Sachs, Halliburton, IBM, Las Vegas Sands. Thursday, you've got American Airlines. You've got Capital One. You've got Freeport. I mean, big stocks. We are here, Newmont Gold. And on Friday, you've got American Express and a couple of smaller plays. So this week is going to be very busy. Now, what I've created for you, out of the goodness of my heart, is an implied volatility graph of what the expected move on all the big players that are coming out this week. And again, I'm going to give it to you if you subscribe to my Telegram channel. And if you come to my VIP room, I'll post a link there. Remember, rogerscott.com/Telegram. So again, you don't want to miss this out. This is a full update for the week ahead. Today, nothing really major, but tomorrow we've got some, we start full blast tomorrow. As far as earnings, as far as economic data is concerned, you've got the Empire State Survey. It's coming out in about 20 minutes. Tomorrow, you've got retail sales, industrial production. Those are the big ones. And then Wednesday, you've got housing starts and petroleum. And then on Thursday, you've got Philadelphia manufacturing, existing home sales, a lot of real estate news this week, and jobless claims. Friday, we have very, very little news. Now, looking at the bond market is staying up here. Unless I see the bond market trade, and this is the TLT, I'm specifically giving you levels on the TLT. Now, it's supposed to open up at 101.71. But I want to see it rally above 102. If we don't see it go above or hit 102 today, then I think the rally in the bond market's over. I do believe we'll hit that level. I think we've got all the way till 104, but I want to see it because there's just no news right now, good news or bad news, that's driving the economy. There's just nothing there right now. And again, if there's nothing there, then usually the bond market will just kind of come back up. There's no pressure on the bond market right now as we sit. So very, very important, something you need to pay attention to. Now, let's talk a little bit about indices and what to expect from the major market groups. Now, technology, as you could see here, didn't do so well Friday. Communication services is starting to cool off a little bit. I think they're all going to come start base down. Consumer discretionary may have a little bit more of a punch because we have some consumer discretionary stocks coming out this week. Industrial, you got to be really careful. Consumer staples, I'm starting to like a lot. I think they're basing out here, and I think as technology comes down, they'll start coming up. Now, I've been wrong about it over here, but it hasn't really gone much lower, and it looks like it's basing out. Real estate looks like it's got some more upside to go. Basic materials could go higher if interest rate sentiment is telling us that they will not raise rates that much more, because that means basic materials will be cheaper if there's no inflation. So inflationary pressure weakening is good for basic materials. Keep an eye on that, although they tend to follow industrial stocks. Healthcare stocks I like right now. Utilities, I don't know. I don't know about utilities. And energy, I'm bearish. I think energies are going to come back down. I'm just not seeing any energy love right now in the market. Now, there's something I want to point out to you, and this is something important, something you really need to pay attention to and take into consideration. Now, I want to show you this. This is Delta Airlines. Now, why am I talking about Delta Airlines? Watch this. Delta Airlines came out with earnings last week. The earnings were better than expected. The stock came up, rallied for 5 minutes, and then look what it did the rest of the day. I'm not. This is Delta after earnings. Now, let me show you Wells Fargo. Look at the bank stocks last week. Some of them came out with really good earnings. The stock opened up, closed at 43, opened up at 45, went right back down. How about JP Morgan? I just want to show you something. There's a pattern here. A lot of these stocks are opening higher on good earnings and coming down. Not necessarily getting weaker, but coming down. Bank of America, let's see. Bank of America, it's not even coming, didn't even come out with earnings, I don't think, or might have. But again, you see this? So the problem I'm seeing is that the earnings that have been priced in are taking into account the fact that most of these stocks rallied quite a bit off of their lows. Like, look, 2630. Look at JP Morgan, for example. They rallied a lot in the last quarter. I mean, look at this, 126, 149. How about Wells Fargo? The point I'm making is that a lot of these stocks have already, look at this, from 35 to 45. A lot of these stocks have already priced in better than expected numbers. Same thing with Delta. Delta was going up, and then news came out, and then it started moving down. So we could have a case this earnings season where positive news is interpreted negatively because the stocks have already moved up to the point of making that move. So again, it could be something where things are already priced in, and that means the only way now is to the downside. And when you take that into account with momentum levels that we're seeing right now, 91% in energy, 96% in industrial, infotech 92, real estate 97. These numbers are not that low, and this is the 50-day we're talking about. Consumer staples is looking good, but for the most part, these numbers are not that great, and they're a little overbought, which means if the earnings are not really good, we can take a dump, a nice big dump on the stock market, which wouldn't be all that great. So just throwing it out there, if you could keep seeing earnings opening better than expected and then the stock dumping, that's not a good trend, and that's a trend that started already last week. Let's talk a little bit about global economy, tie everything together in a bow, and give you a day trading stock with some numbers for this morning. So market participants digested the latest economic data from China while looking ahead to a busy corporate week. Data on Friday showed that the University of Michigan consumer sentiment rose, which is very, very positive. And meanwhile, we have a 95.5% chance that interest rates are going to go up, which is why I believe there's almost no uncertainty in the bond market, which means it can go higher if it breaks 102 today. If it doesn't break 102, I would dump this guy. Earnings kicks off. Bank of America, Morgan Stanley, Goldman Sachs, and the large investment banks are not supposed to do all that well, by the way, in comparison to consumer banks. Tesla, Netflix on Wednesday, Johnson & Johnson, Lockheed Martin. Busy week. We're all focused on the New York Empire State Manufacturing. That's coming out in about 13 minutes. Europe this morning. Economic data, weak economic data from China dampened sentiment. Investors are bracing for second quarter earnings, and the implication, consumer staples and mining stocks experienced a decline in China, in Europe. I keep confusing Europe and China, so be careful. And healthcare outperformed. In China, they closed lower after another round of weak data-fueled concerns about recovery. National Bureau of Statistics on Monday released data indicating sluggish growth. That's bad for our economy. Although the annual figure appeared stronger due to a weak comparison in 22, data released on Monday increased the pressure on the policymakers in China to implement additional stimulus measures to shore up economy. Now, pre-market, you could be seeing a little move on Chewy, Activision, they've been upgraded, Tesla got upgraded, Twilio got downgraded, and not much earnings today. As far as a day trading stock that I'm looking at, I'd like to give little plays, little small caps. I'm looking at this stock. Now, the stock is up 94% pre-open, which is quite a bit. I want to see it trade above the $12 level at the open. If it trades above the $12 level at the open, it could do well. But if it doesn't trade above 12.30, 12.40, I want to make sure that the pre-market level that we're seeing is beaten. Look at this, it's almost at 13. So it's up already over 110 points. Wow, 13. So what we want to do is we want to make sure it trades above $12.50, $13. We want to make sure that it trades above the pre-opening session, which closes at 9:30. So right now it's already showing 14. Keep an eye on this stock. I bet you it's earnings or news. Let's see. Let's see what it is. Earnings. The stock had earnings. Again, these are very small cap plays that are going up. I think these make really good day trading for the first half hour of the day. Get out on the first red bar basically. But if it takes out the pre-opening high, that's a good price. It's already at 13. It was at 982 when I was doing this report. Now it's already at 13.13. So keep an eye on that stock as well. And again, if it takes out on the open, the pre-opening high on the open, within 5 minutes, that's the play you want, and it's already at 13.50 pre-open, so it's already up 114%. If you look at the chart of the stock, you could see that it's near the upper end of the range, which is a very good sign, and it's breaking out, and it looks like it's going to break out way above. So keep an eye on ABOS if you're a day trader. Now, just wanted to give you a little bit of the full gamut of the menu, right? Why not get the dessert too? So folks. The rave reviews have been pouring in nonstop about my new strategy, Stealth Surge Alerts. It's based on a patent-pending software my team and I created, and it was beta tested by 92 very happy traders before going live to the public. So far, we've seen a modest win rate of only 86% on live trades. Modest, right? 86%. It's crazy good, right? On 30 trades, 86% on 30 trades, including 6 straight winners in a row. Oh yeah, it's like that. And get this, the average gain on the option is better than 30% with just a 6-day average hold time. Crushing the S&P 500, like destroying it, obliterating it. We make one new trade each week, sometimes 2. So make sure you check this program out before the next trade drops. And today is Monday, which means it's probably going to drop today. Click the link below, learn all about it. If you're watching this on the YouTube Wealth Press channel, there's a link below this video. Don't forget, tell a VIP room at noon today, link above or below depending on where you're watching it. I'll see you guys soon. Bye. And keep an eye on the stock, ABOS. It's a crazy mover, 100% pre-open. My God. Bye.